Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for our US stock market weekly roundup, and we're going to be looking at the S&P 500, the NASDAQ and the Dow Jones Industrial Average as always. We're going to start with our basic technical analysis first and our Elliott wave analysis second. But before we do that, a quick rundown of the chart in case you're new. Right, so the first thing you can see here on the SPY, we're on the weekly time frame in arithmetic scale. You can see a big load of very cluttered numbers and letters. Don't worry about this. We'll dig into our Elliott wave section of the video later on, and I have some simplified counts which are less cluttered to present as well. But this is our Elliott wave count nonetheless, and these are all the numbers and letters. So let's just move it out of the way. We then have 4 exponential moving averages on the chart: 10 in yellow, 20 in blue, 60 in orange, and the 250 in green. We have a volume profile on the right hand side here showing the various peaks and troughs of the buy sell volume, with the extreme of which being marked by this yellow dashed line, which we call the point of control. This is a visible range and adjusts when we adjust what we can see on the chart. We have an RSI set to a 10 close, with the green 30 level representing oversold conditions and the red 70 level representing overbought. We also have a MACD with a 10 for the short term moving average, which is in blue, 20 for the long, which is in orange, and a 9 to smooth. Right, what can we see here? On the weekly time frame, an incredibly bullish candle. Very, very bullish week. Probably one of the most bullish weeks I have ever seen in the stock market in all the time I've been trading. So I challenge you to go and find one more bullish on the daily time frame when we come down and see 11 green candles in a row. 11 positive closes in a row, which is challenge you to go and find it if you can find better somewhere. I'm not saying it doesn't exist, but if you find it, please let me know. I'd be interested in seeing it. Right then, so above the 10, 20, 60, 250 exponential moving averages on the weekly time frame, trading in what apparently on the volume profile is the first time we've just seen just buyers. There are no sellers in this market according to the volume profile. I think this is a glitch, as it's literally just blue up here. There's no sell volume recorded at all. We have a oversold reading on the RSI of 72.45. You know, it's not extremely overbought. Did I say oversold? I meant to say overbought. We've been more overbought before, like on the 21st of Jan, back in 2020, we were 85. But look at where we are relative to that peak. You know, we're so much higher in price, but there's no bearish divergence to speak of on the weekly time frame anymore. They're just flat tops, top to top, no divergence between high and lower high. Yes, we have highs and higher highs in price, but you can't really call this final move up now has basically gotten rid of that on the weekly time frame. If we look at the MACD, bullish crossover of the short-term moving average over the long-term moving average and accelerating away. That's bullish as well. We have a bright green bar appearing on the histogram here after this rather sideways, slightly bearish price action, or slightly bearish reading here on the momentum indicator. We've had this pop into a green candle. Right, so just looking bullish on the weekly time frame. Let's come down to the daily time frame. Above the 10, 20, 60 and 250 exponential moving averages on the daily time frame also. Now, like I said, here we go. Let's just double check this and get our measurement out here. We're just going to have to tolerate the count coming back. 10 bars if you're not including the one we started with. So it's actually 11 if we just count them. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 green bars in a row. You know, it doesn't really matter where I look. I can't find a run of 11 green, but this is quite a big run. 1, 2, 3, 4, 5, 6, 7, 8, 9 there. Well, I'm not going to spend the rest of the video looking through the stock market to find 11 bars in a row, but I don't think I've ever seen it. So, challenge to you guys in the comment section. You want to go find it? Please tell me where it is. I'd be curious to see it. You can go back 50 years if you like, longer. Like I said, volume profile seems to have just glitched out here at the moment, or it's telling the truth and there are no sellers left in the market. It's just buyers all the way. We only have blue here on the volume profile at the peak for the last, I mean, what is this, like 4-day move? I mean, that's got to be a glitch. Right, anyway, let's get rid of the count again because we had to bring that up when we brought it with little measurements. So, above all the exponential moving averages, long way from the 250 now. overbought on the daily time frame with a reading of 77.23, the highest reading we've had since January 2020. So we are just flat out overbought now. Obviously, the other indicators are telling that as well. Very bright green bars on the histogram here on the daily time frame. Short-term moving average accelerating away from the longer term here. No sign of bullish momentum dying yet. Could be sign of bullish momentum peaking, but you know you're trying to stop a rocket from taking off if you're trying to call the exact top. And we're going to see someone trying to do that later because my Elliott wave counts are in conflict with what the basic technical analysis is telling us here. Yes, I have ways we can go higher and keep pushing this. I'm not going to argue with what the technicals are telling me. This all looks very bullish, but the count as it is at the moment does suggest that the market is trying to peak, or is at least in the process of doing so. And we are seeing extreme conditions. So it's always darkest before the dawn, they say. So if you're going deep down into a horrible dark sell-off, it's always darkest right before the bottom. Well, it's always brightest right before the top. Because obviously you can only get there by buying. You can't get there by the sellers being in charge. You can only peak, a market can only peak at its maximum level of exuberance, at its maximum number of buyers to sellers. So you never know when it's coming, but the condition is extreme exuberance and greed. That's what you need to see as the market's peaking. We've got those signs, I think, but we can't call the top to it. It could keep going. It could just keep going. So let's come to the NASDAQ now on the weekly time frame and see what we can see. Let's just clear the count here as well. So above the 10, 20, 60, 250. This is the 100 simple. You know, I'm getting rid of that. It's 100 EMA. It just hasn't been of any use on any time frame recently, so that's gone. I'll stick with my usual setup. Just off making new high on Friday, got very close, closed near the peak of the candle, but just couldn't quite push the new highs. Pretty sure we will at the start of next week. You can see how on the weekly time frame here, the 20 exponential moving average in blue was just a line in the sand that the bulls were going to defend no matter what. We can see that there was just no way we were going to allow, or anyone was going to allow, the market closing a weekly candle with the body of the candle below this blue line. We wicked through it, closed above it, wicked through it, closed well above it, wicked to it, closed above it, wicked through it, closed above it, wicked to it, closed well above it. It just wasn't going to happen, and the bulls have said no, we're not going any lower, and that's what's happened. So I thought this was going to turn around this week. We were going to come down, coil up like we've been doing on the daily time frame, find some resistance and then sell off. So we couldn't get through it on the first attempt, come back, try it again. That has not occurred. So I think the bearish count that I have here, why I presented the bullish count a couple of weeks ago as an alternative, I think the bearish count is about to die for the short term. Still well above the 60, miles and miles and miles and miles from the 250. Probably the greatest distance I've ever seen. Easily during this 2008, easily during this bull market. This is the greatest distance from a 250-day average we've seen. Probably, I'd argue you'd have to go back through a lot of stock market history to find this kind of extreme again. We do still have bearish divergence in the weekly time frame on the RSI for the NASDAQ, but not if we set another high higher than the high back in August, which if we're about to pop, we could do that on the RSI. However, if we top soon and just roll over, we would set a lower high, and that would be a continued theme of weekly bearish divergence on the RSI. MACD, however, short-term moving average heading towards the long-term moving average. It looks like we're about to cross bullish into green bars on the histogram to come after seeing this bearish momentum die down. Right, it's daily time frame. Let's see what we can see. A big bullish rush to the upside. Let's tell you what, let's just pop over to the NQ1 chart since we've got the volume profile and see if we can see we don't have that blue only glitch here on the futures market, so I do think that's just some kind of glitch in the SPY. We have to, there isn't a market if there aren't buyers and sellers, so it's obviously some kind of fault. But either way, still extremely bullish. Not in sorry, I'm on the weekly. Let's go into the daily time frame. Daily time frame, we don't see it either. We see yellow and blue all the way like we should. We are overbought on the RSI in the daily time frame at 72.63. And NASDAQ has done an awful lot to break down what was a series of lower lows, lower highs in the RSI and higher highs in price. It has done a lot with this move back into overbought conditions to break up and break down that bearish divergence. A visit to, but not through, oversold conditions seems to have shaken it off. For the meantime, weekly time frame, it could still exist. A bit of slightly different from what we're seeing in the S&P, where it's the reverse, where we're seeing no divergence left on the weekly time frame, but a build up of it on the daily time frame. MACD bullish, there's no arguing with that. Blue has crossed over the orange and continued to accelerate higher. Yeah, I mentioned in my previous video this coiling of moving averages. How when the moving averages coil like this, and you get no movement, and you get it around a big area of volume like we did here, right around our point of control, the price is about to pop. You know, and true enough, it popped, but it never reversed afterwards. So that's that. Dow. Let's have a look at the Dow. Same gig. Let's get rid of the Elliott wave count above the 10, 20, 60, 250. That goes without saying at the moment. Overbought conditions on the RSI reading 75.94, the most overbought condition on the weekly time frame out of the three indices we've recorded thus far. No bearish divergence on the weekly time frame at all between price and RSI, none at all between MACD and price either, just a flat out charge higher. The swing in bullish and bearish momentum is reducing slightly, but this is perfectly normal. You get volatile moves and it starts to flatten out over time, and that can take months, years even. Short-term moving average still accelerating away from long-term average, still looking bullish. Daily time frame. Right then. Above the 10, 20, 60, 250. Getting tired of saying it, but it just seems to always be true. Very bullish move, finishing right at the top of the peak of the candle for the whole week, closing on the Friday with a very bullish close for the Friday. Overbought conditions also on the RSI. On the day time frame, no bearish divergence to speak of. MACD. There's a slight bearish divergence between this high and the recent high in the MACD, but it's not supported by RSI. Maybe there's something in it. We don't, even with this violent move up, we don't seem to be getting much green on the daytime frame in the MACD. We could be peaking. Yes, everything looks bullish, but it always does right before the peak, just as the darkness does before the dawn, like I said, if you're going down. So, right, that's enough of a basic technical analysis, I think. So let's come down and start digging into these counts. You're going to see there's a bit of contradictory information here, because what the count is telling us is different from what the basic analysis is telling us at the moment. Excuse me, I'm just going to have a quick sip of my coffee. Now, this video might run for a little while, but I'm going to timestamp it like I always do in my weekly stock market review. So, first thing I want to do is log this and go to the weekly time frame. So, I just want to share a couple of things with you here. Let's go full screen. So, weekly time frame, let's get a look at this entire bull market from 2009 low and our 5-wave move to the high, which I've been saying is coming soon, but you can't call the top when you're sat on top of a rocket. You can't call when it's going to run out of fuel, you know. But you can say going to happen soon. But soon, when you're doing thousands of miles an hour, that's a long distance you could cover. But it's still going to run out soon, is my opinion. So, but just take that with a grain of salt, because you can't call in the exact top. Maybe you can do it, but all you can do is point at it. Somewhere here. So 1, 2, 3, 4, 5 nice clear impulse wave up, with the extension being in the 3 and then the 5 up here. So we can see how it's channeled really beautifully. 1, 2, 3, 4 we broke down. I mean, it's not uncommon to see an overthrow in the 3. It's not uncommon to see an underthrow in the 4. We got that underthrow because of an expanding triangle in the primary in the cycle wave 3, 4 here. If we come in and zoom into the top to see where we are in relationship to this long-term trend line, you can see we closed up until this week we were below it, and this week we closed above it. So it's either going to prove itself to not be relevant, and we're just off to the moon in a whole new bull market, and this whole count is wrong. I don't believe that. I believe the count could be wrong, but I don't believe this is a new cyclical bull market, because I don't believe you can have a bear market last a couple of weeks. Okay, essentially, yes, I know it's more than that, but a couple of months, whatever, and then we're off. These kind of cyclical downturns last months and years. Okay, and they take a long time to recover from. Plus the count we have overall with our expanding triangle in the wave 4 supports completely that it's singly a part of a final move up, not a new move up. So we are going to come down and zoom in again onto the more recent price action. Come down to the 2 hour, shall we? Or to the chart and see what we can see. So you can see the big blue line is right here. This is the long-term trend of the market all the way back from 2009. As you can see, we did pay it some respect. It is a 12-year long line, a trend, and we came up here and we went tap, 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 tap. Oh, sod it, let's go. And we went through it. So it really isn't something you would have expected. I would have expected a bit more respect for such a long-term trend line, but it would appear that the short-term trend, which is the white line here in this expanding wedge pattern we've got for our count up, this has been tagged here, so 1 to 3 to 5 I'm looking for. So if we're going to peak inside of this, we will either get an overthrow, where you break out of the trend to tag something more important perhaps, or to just because you get runaway momentum, you come out of the trend and then you break down violently. So my count at the moment, if this count's correct, I can't be sure of this last leg up from a completion of the wave 4. This could be a 1, 2, 3, 4, 5 to come, and I've got it counted as a 1, 2, 3, 4 in the 5th, looking to complete soon. That's all I can really say. If this count is correct, we've got a 5-wave move like this, a very complicated and drawn out wave 3, but I have managed to create a 5-wave impulse wave count without an overlap. The issue we've got to be aware of here is the length of this 3. So let's come and have a quick look. So all we need to know is what the length of the 3 is relative to the 1. Okay, so if we just come to the 1 and down to the 2, we can see that the wave 3 did not make it. Okay, did not make it to the length of the 1. See, here's 100%. So if my intermediate wave 3 is going to be in the correct place, we need to make sure that it can't possibly be longer than the wave 5. So let's just double check that, because last week's price action may have changed this. Okay, it is not yet longer than the 3. A breakout of the wedge would, it's got to turn around ASAP if this count's going to be, if I can hold on to this count any longer. And I'm not clinging to it with my life, I'm just holding it because it's legit and it looks right, but it can be proven wrong pretty much any moment. So let's just mark up here the 100% the length of wave 3. So here's our wave 5 limit right here. So I'm just going to pull it out. It's a big call out. Now I've got a bunch of confluences I want to share with you, which we're going to use a naked S&P chart to do later, which I think are some really interesting little Fibonacci confluences, which does put a top very close to us in terms of wave relationships. We'll look at that in a minute. Wave 5, what's that, intermediate? Let's just say int for shorter. 5-wave int invalidation point. Okay, so we can't go beyond this. If we do, this is wrong. That's it, that's our invalidation point, and we're just going to have to be religious with that. We can't keep killing ourselves of a bullish count the way I've got it jigged up here. If we go beyond this point, we could peak before it and then have an almighty sell-off. It's possible. Either way, I still have us in the 5th and final primary wave. How far it extends, time will tell. So we'll come back to the chart of the S&P, we'll throw some of those fib relationships up in a bit, and I think you might find it quite interesting how right here around the invalidation point there's a whole bunch of Fibonacci confluences given wavelengths, which we'll come and have a look at. So on the NASDAQ, which count is this? This is the bullish one, so let's just deal with the bearish one for a moment, because this is really easy to sort out. Zoom in. Right, so wave 5 was here back in 16th of February, wave 1, wave 2, if we go beyond this line here at 13,902 spot 50, we've already gone past A to B, A to C parity projected from the B. If we go beyond the previous high, this is not a bearish count, it's wrong, and we have to look at the bullish count, which I'll show you in a moment. So this is going to be invalidated probably Monday morning. Unless we get a turnaround and we open lower, this is going to be invalidated pretty much on the first day of next week, on the Monday, I reckon. We'd have to find an excuse to bugger about sideways for a day or two for that not to be true, or we'd have to reverse and start selling off. Either way, we are so close to invalidating this now, I don't think we can really hang on to this. We will until the last moment as an option, because we have to hang on to it as an option, because that's what the Elliott wave, tells us, that the wave 2 can come back to 99.999% of wave 1. So, and let's just, while we're here, just as a guideline, pop our short-term fib channel around it. Okay, and we'll just shrink this down, so get rid of the extension on the way onto the right. I'll drag it out manually. Okay, so as you can see, using a fib channel to find the, this is a way of projecting the C. Okay, so here's the C. Here's the 2. It has to be here, or the bearish count is wrong. 5, 3, 5 wave move, gone past parity at 100% projected from the B. This undermines my confidence in this being correct. We have stayed perfectly inside of the fib channel though. Yep, can't argue that. We've gone 5 wave move to the point, 3 wave move to the edge of the channel, 5 wave move to a point at the edge of the channel. If this bearish count has any hope of survival, it's got to do this, and fast. Okay, and it's got to break down. There's got to be something happen in the world which is going to make this count come to fruition. You know, and it's going to have to be pretty extreme if this bearish count is going to survive. So this is on ice now well, who knows? It could be dead by Monday morning. Right, so that's the bearish count. If you're bearish, your invalidation point is literally within a few ticks. Hanging on after that point, regardless of where you got in. I had to abandon the trade after we went through 100 parity from A to C. So, you know, this is just the way it is. I've got in long after this 5 wave move and 3 wave move back, and then I was waiting for this to turn all week. We came up to parity, and I thought I'd take a short to cover, and I was out with it. I was out of it within a few minutes, and I thought, nah, yeah, you're just trying to call a wave 2 at 90% retracement of wave 1. I'm not saying it can't happen. It's just bloody unlikely. So I'm just going to keep my long position from this point and ride this out. Okay, so that's the bearish count. It's almost dead. Let's go over and have a look at the bullish count, the one I presented last week. So this is built on the idea that the bulls defended their invalidation point at the top of the wave 1. I mentioned this in a video a few weeks ago, probably a month or so ago now, where I said because of this defense by the bulls, we have to give the bulls the benefit of the doubt now that they've managed to defend an important invalidation point within a few ticks, and then you have to give them benefit of the doubt that they're bullish. Sure enough, although my personal bias was for a 3 wave move up and then a fall down, the bulls seem to have this one in the bag. So 1, 2, 3, 4, 5 intermediate waves into a 5 excuse me, of a 5 of a 5. So the projections we have up here currently are based off of a couple of fib relationships. The first one is 100% wave 1 projected from the 4, which is a typical impulse wave completion for a 5. That gives us a double top just above the previous high, just around 13,962 spot 5. We could say 14,000 then, couldn't we, really? Right up here is wave 1 projected from the wave 4. So it is still possible that we go 1, 2, somehow getting, we've either done a 3, 4 here and the wave degree is just complete wrong. I'm not buying that for a second. It just doesn't look right. We'd have to have a 4 come back down, not but on the 1, then a 5, come up and finish around here, and then you sell off. That's if you're going to respect that fib target. Because I can't see you getting a 3, 4 and a 5 inside such a small time frame. You'd have to take some time to do it. You'd likely come back and test this channel again. So like I said, that would keep the bearish count, the bearish interpretation in the game if we turn around before the high. But you could easily come up beyond the high, then turn around into a 4, then come looking for a 5th. The next fib target is 61.8% of 1 and 3 from 4. So this is the whole length of all of wave 1 and all of wave 3 projected together as one measurement from the wave 4 to find 61.8% of 1 and 3 from 4. This is the second typical finishing area for a wave 5. Okay, now that's all well and good saying that, but there's no reason why it can't push higher. These are typical finishing points, but we have to remember that we're in extremely bullish conditions at the moment, and everything's getting stretched. Overbought conditions are getting stretched, momentum indicators, how many green candles appear in a week, they're all getting stretched. So let's just take a normal fib channel from the wave 1 here, project it onto the 3, and drag it down to our 4, and say, alright, what if we just get a more typical channeling instead? So we go 1, 2, and make sure we move this to the 2, because that deep 4 could be an underthrow of the channel. Alright, so now all of a sudden we can put a 5th all the way up here at the top of the channel, and say, let's just say 1 to 3 to project the 5. Okay, an alternate way of doing this would be if we just, because it's such a potentially dominant 4th wave, because we had such a deep sell-off in the 4 relative to the 2, which almost invalidated the whole pattern, you could say 2 to 4 to 3 to find the 5, which would put it a little lower. Okay, but you should really, I mean, you either got to go 2 to 4 or you got to go 1 to 3 to 5. Now, traditionally, we always pick 1 to 3 to 5 because we want to get those 3 in a row to find our fib relationship here. So, am I expanding that or am I moving it? I think I'm just expanding it, aren't I? Whatever. Let's leave it like that for the moment then. So, normal fib channel, taking the 1 and the 3 to project the 5 somewhere higher up. So we've got the channel to look at, we've got the 100% projection of wave 1 from 4, and we've got the 61.8% extension of 1 and 3 from 4, all up here waiting for us. But the second we take out that high, probably Monday or Tuesday, unless we turn around into this 4, or the bearish count is somehow miraculously right and turns around at the last moment, then we have to project the NASDAQ higher, potentially 15 grand up here. Okay, could keep pushing until we see some kind of reversal or rejection. We've got to keep projecting higher now in the short term. Okay, so that's the bullish, simplified bullish count for the NASDAQ. Let's look at the Dow. Now the Dow, sorry, it's just like I haven't been able to make heads or tails of this final move in the Dow. No matter, it's just this is working on a completely different notion. All right. The dead Dow theory, the dead Dow idea, which I put out a few weeks ago. I'm not saying it's right, it's just an alternate idea. I hope you find it interesting. I find it interesting. I find it frustrating as well, especially trying to make sense of what now looks like an ending diagonal. So I'm now saying that you have a motive impulse in the A, three-way flat in the B, and then a motive diagonal in the C. Okay. And then we've got a target up here, a 61.8% extension from the B to find the C here. And we do have this kind of wedge shape and 3 waves ending diagonal. This is 3 waves into the 1, 3 waves into the 2, 3 waves into the C, 3 waves into the 4, and maybe working on 3 waves now, another zigzag into the C of the 5 of the B before we come all the way back down to hell below the COVID low. I mean, this is just an idea. Like I said, I'm entertaining this purely on the notion that I can't count it the same way I've been counting the S&P or the NASDAQ. I just can't make this motive wave. If it is a motive wave of 5 waves, I cannot make it fit an impulse. Just doesn't. There's too much overlapping going on all over the place. Let's just come into the 2 hour here and have a look at this structure. So the initial A move looks like a 5 wave move. We then get one of the choppiest, most overlapping piles of shit I have ever seen, ever, for an extended period to make a B wave. Okay, so I've got this as probably, well, I could move it to here and then say 1, 2, 3, 4, 5 into the C, and all of this is just a mess. a B wave. It still completes below the high of the A, so we could say this is just a double combination. W, X, Y, X. It's in there somewhere. I haven't labelled it because I just, it's just one of those things. If I had to slap a label on it, what would I do? So I could say W, X, Y, X, Z. Solid. That'll do. Alright, this is just so ugly that I really don't want to waste time mucking about with it. The idea, putting it as simply as possible, is a series of three-wave moves. 1, 2, 3 into the 1. 1, 2, 3 into the 2. 1, 2, 3 into the 3. 1, 2, 3 into the 4. And then this is in A, B, and then probably 5 waves to finish the 3 up into the C of the 5. This now, it's after all this zigzag movement, series of ABCs and three waves moves, that we start to get some kind of impulse emerging, which is, just like the cherry on the cake. The fuck you cherry on the cake. Trying to make sense of me, are you? Well, make sense of this. Sorry, excuse me. It's just yeah. I mean, if you could get a better count, like I said, I mucked around with an impulse wave in here, and I can't make it work. So if you can get a better count to make sense of this overall, because even if you want to say less than a 23.6% retracement of the whole move up is a 1-2, you still can't make this count as a 3 because there's so much overlap. I guess you'd have to say, no, I can't do it. I don't know how you do it. Maybe this is a leading diagonal. This whole thing goes 1, 2, 3, 4, 5 into a 1, 2. Now we're on a 1, 2, 1, 2, 1, 2, 3. I guess maybe you could count it like that, and that's fair enough. I'm not saying it's wrong, but you're looking at a retracement of slightly over 23% and calling it a wave 2. I mean, fair enough, it could be. I just don't believe it. That's it. My personal bias there, guys. But if I'm wrong and this thing just keeps flying, if this is a wedge, right, and we're going to pop and we're going to reach this target, I would expect to see it have an overthrow. I mean, that's very, very typical. So even with this potentially being a bearish completion up here of a peak, you'd still expect to see it push higher out of this wedge, because it's just so typical to see that acceleration towards the end of the move before it comes down. So even with trying to say that perhaps we're in a fifth and final wave, I would still expect to see another push higher. Things are just so bullish at the moment. But this is the issue I've got. I've got counts conflicting with basic analysis. You got extremely bullish conditions, right? So all of that, great, hunky-dory. Now let's go over, before we finish the video, and have a look at these confluences I mentioned. So what we're going to do for this is, I'm just going to see if I have an empty chart. A 1 year channel, 100 year channel, what's this one? Oh yes, I know this one. This is another chart which I gotta tell you what, I've got a couple of minutes, I'll share it with you. So this is from 1929 to now. So this is like the long-term picture. Now this potentially calls for just an obscene run-up. Okay, I'm not saying it's impossible, I'm just saying the current count doesn't support it. But if the current count is part of a greater count and could still suffer an extreme correction, then yes, you could argue that this is going to go much higher long term. So you could go 1, 2, 3, 4, and then the fifth to the top of the channel, depending on where you got to. It depends how long it runs for. We're already in 12 years here. You're over 10,000 on the S&P at this point, getting up into this territory. So, just inflationary driven madness perhaps. But then I also believe that it's highly likely that this is not a completed wave yet, that this is close to being a completed wave. So you could argue maybe over the long term you're doing something like 1, then 2, then 3, then 4, then 5, but who cares? I mean, you're off into 2050, 2060 by then. So let's just come back to reality for a minute, guys. I wanted to show you these confluences before we go, didn't I? So this is to wrap up the video, probably going to take just no more than 10 minutes. Okay, so the first thing we want to look at is this COVID swing here. Prime, swing high, swing low. So the first target we're going to do is we're going to drag down the fib retracement. Okay, so we can see that the high, which I'm calling in the S&P 500 on the Ellie wave count, let's just remind ourselves, it's up here, wave 5 invalidation point. Okay, we're within a few ticks of it. Happens to coincide with the 1.618. I mean, it's crazy how close it is. You know, it's just one of those things. It's just crazy how close it is. Um, let's just see where it was. We said wave 3, which was projected to remind myself at 3-4 swing, 3-4 swing. That's the 1-2. Bear with me one moment. Was it this? I think it was this. Right. Okay, so here's that 1.618, the yellow line here, and here's the limit. 4163. The only thing the bears have to hang on to here is you got, yes, a massive fib confluence here of an invalidation point combined with a 1.618. At least it's above it. Okay, the invalidation point is above it, which gives you a few ticks to run. A few ticks to run through the 1.618 before this market has to reverse, if that count is correct. So there's one confluence. Let's zoom out again because there's several. Okay, so I like that. You know, this is a 1.618 extension of this move down. So this is a likely place to find resistance. We've already just seen the second confluence, which is the invalidation point. So that's 2. The next thing we want to look at is the relationship of this here. Okay, so this is the idea of wave 1 and 3. Okay, projected from before, and we're right in the yellow zone. We tagged the 161.8 and had a couple of candles. You're probably going to have to zoom in. We had these few days, and this is right around that previous long-term trend line. Remember that I showed you the really long-term trend line, which is another piece of confluence. And it's not a fib confluence, but it is a channel, and it does finish right up here, so we can count that a third piece of confluence. We've got this one here as well, which is the 61.8, 65 yellow zone, right around the invalidation point, right around the 1.618 extension of the swing down in high to low in the COVID sell-off. So there's 4 pieces of confluence, all telling us that there's resistance up here. Okay, what's the next thing we're looking at? We've already the other piece we were looking at obviously was the actual channel, the actual upper trend of 1 to 3 to 5 is right up here as well. That's another piece. And what if was there anything else? I've got a feeling there was, and it's just tripping me up. What was it? You know what? It seems to have completely gone out of my mind, but either way, let's just put the ones that we've discovered on the chart and leave them here for the moment, and we can save this as a separate chart since I'm not using it. 1.618. So we'll mark we'll mark that with a line. Okay. So we're right at that 1.618 extension. Is it T-I-O-N or S-I-O-N? I want to say S. Spelling was never my strong point. Right, there we go. So there's one. The next one we had was golden zone with, golden zone with golden zone. So taking the length of the 3. Do we take it from here? We take it from here, don't we? Because I'm saying A, B, C in my count. We can see that overlaps with the 65 to the tick. So we'll just say yellow zone, because that's the yellow zone extension. And we'll just pop another little ticker up here. What am I saying? 1 and 3 from 4 yellow zone. Alright, so that's another piece of confluence. The next one was that target, wasn't it, of the 100 sorry, the limiter, that's it, the limit on the length of wave 3. Yes, because we can't go beyond the length of wave 3, otherwise it would be the shortest. That was it. I need more coffee, apparently. Right then, so let's just pop that up here. That is right here at 4154. And move this white line up here. And another piece of Confluence up here as well. All hanging around in the same place. So wave, int wave 5 limit. Right, this is why we've got timestamps in the video. If you cannot be arsed with listening to me waffle on about all this nonsense, you can just watch the bits of analysis that you like, come back to it later. But while I'm here, I'm determined to try and get down as many pieces as I can. So let's just pop this channel, this trend line, or was it no, fib channel, wasn't it? So from the 1 to the 3. Alright, so we've got this fib channel up here as well. We'll keep that in place because it's probably still active. And then we had got to come out onto the weekly. And then we've got this long term. I'm saying this is a 1, 2, 3, 4, 5, 1 ABC flat into the 2 on the cyclical time frame. Okay, so which means I can't rejoin these highs. I've got to join the 3 up here, otherwise I'm cheating, making it look better for me, or better for the bearish case than it should. That takes in the 1, the 3 here, ignoring the 4. So 1 to find the 3 to find the 5. So let's come in and have a look. And that's right here as well. So for God's sake, if we don't turn around here or find a reason to turn around here in the short term, for any reason, given all these confluences and all this pressure up here, then we're just not going to. We're just going to break all of this, break the chart, and just push into a new high, and we have to come back and reconsider a lot of stuff. So we've got the let's run them down. The 1.618 from the swing high, swing low during the COVID sell-off. We've got the length of 1 and 3 projected from the 4 on the intermediate time. No, sorry, on the intermediate time frame. Is that right? Which is a wave 5 limit. 1 and 3. No, 1 and 3 on the primary time frames up here as well. And that's where I'm going to leave it. If I dig out anything else, what about the wave 1? No, let's not muck about anymore. That's good enough. Okay, all right then, guys. First thing I want to do before signing off is I want to thank my patrons who've recently joined me. It's been a really good launch for Patreon the last week, actually. Thank you very much for joining. Your support is greatly appreciated. Having a great time chatting with you guys on the Discord already. Already sharing some great ideas. Really nice to see everyone contributing. So if you're interested in becoming a patron and you want to join that community and you want to get advantage to all the benefits that are offered by the different tiers, then there's a link to my Patreon in the description below. It's also on my YouTube banner on the channel page, and it's also in my Twitter feed. Feel free to go over, have a read of the benefits you can gain by becoming a patron. Also follow me on Twitter. There's a link in the description and the channel banner as well, below, or in the description below this video. And if you're new to the channel, please subscribe, smash the like. Let us know what you think in the comment section below if you're interested. Hit the bell notification icon to remain informed of future video releases. And I will see you guys again next week for our weekly market roundup and a few other videos during the week before then. Take care. Bye bye.